All right, so I stopped at how to analyze the forex market. That was the last place I was before the last meeting ended. And I said, when analyzing the forex market, there are two ways to analyze the forex market, which is fundamental and technical analysis. Fundamental and technical analysis. And what is fundamental analysis? Let's start with fundamental analysis. Fundamental analysis is when you come to your chart like this and you want to analyze your chart to know whether you should be buying or selling the market. I told you, Forex is just about two things, knowing whether, trying to figure out whether you should buy or sell a particular currency pair for so that you make profit. That's just what it is. So if you want to do your fundamental analysis to ascertain whether you should buy or sell the market, how do you do that? Fundamental analysis is just using real life economic and political events to figure out whether you should buy or sell a financial market or asset. Using real life economic and political events to predict the future movement of a particular currency pair or a particular financial instrument. And I have a very perfect example to give you regarding fundamental analysis. So fundamental analysis now is when you're using real life events, things that happen real life that you can see and hear with your eyes and your ears, things that have happened. Like, so let me give you one perfect example that fits this. During the inauguration of our newly elected president, Bola Tinubu, in his acceptance speech, he said something that caused the price of petrol or fuel to increase, right? What did he say? He just mentioned that there's going to be subsidy removal. There's not going to be subsidy anymore. They are going to remove subsidy. And immediately he said that, what happened to petrol? What happened to the price of petrol? Petrol moved from 280 or thereabouts to 600 naira per liter. Now, that is a perfect example of fundamental analysis. You trying to use your knowledge of what has happened to predict the future movement of price. So if you are a forex trader and if it was possible for you to trade the Nigerian oil, you get, because you can trade oil of other countries like the US oil, UK oil, but Nigerian economy and Nigerian everything is very backward that nobody even gives a damn about our oil dilemma for it to be traded online. You get? So
Yeah.
if for example now, if it were possible that you could trade Nigerian oil, immediately Tinubu said that um they are going to remove subsidy and you have the knowledge of Forex, you know that, okay, this statement he has made is going to affect the Nigerian oil in this particular way. Because subsidy is going to be removed, definitely the prices of oil is going to increase. So what you will have done is for you to buy 10 trailers or 10 tankers of oil. I'm just giving you an example. So if you had bought 10 tankers of oil immediately after the statement, when petrol was still like 300 naira per liter, if you had bought 10 tankers, by now, you know you're a big boy because you're going to be selling it at like 600 naira per liter. So that is just exactly how to use fundamentals, how to use real life economic and um, political events to trade the forex market. So if it were on the charts like this chart right now, what I'm going to do immediately, Tinubu mentioned that, is that I'm going to buy this market. So assuming that the market was here, the price of the market was here when Tinubu said that he was going to buy, he was going to remove subsidy. So what happened is that I will have placed my buy right about here on this line, or let me use a rectangle. What will have happened is that I will have bought oil right here because I know because of the removal of the subsidy, the prices are going to go up. Just like what has happened in this case here on this chart. You see that prices have gone up. This is the candlestick that is showing you that price is going up, right? This is the candlestick that price has gone up. So if I were somebody that is going to leverage on that news or on the statement of Tinubu, I will predict that the market, that is the oil market of Nigeria, is going to go up. So I'm going to place a buy right about here. And then the prices, of course, went up by double in just a very short period of time. So that is just what fundamental analysis is. So if to trade fundamental analysis, we have a lot of Forex calendars that show you calendar of economic events that are coming up every day, every day. So every day we have different economic events that come up concerning different currencies, different countries, concerning the US dollar, concerning the British pound, concerning the Japanese yen. We have different economic events that come up every day. So an example is we have interest rates of different currencies. So if today the interest rate report is coming out for Nigerian naira, or let's use dollars, let's stick with the major currency dollar. What will happen is that that news event that is coming out is going to have a high impact on the dollar. So you're going to see very crazy movement on the price of dollar because of the economic event that is coming out. Why? Every trader around the world knows that they are going to release an economic event. They are going to release the news, a fundamental event that concerns United States dollar. And if they release this news now, whatever the data is going to either have a positive or a negative effect on the United States dollar, on the dollar. So everybody is going to be waiting, anticipating for the news to come out. Immediately the news is released, you're going to see a huge spike in the price. The price will either go up or go down, depending on what the news, what the data says. So that is how people treat fundamental events or that's how people do fundamental analysis and trade the news. So you have different economic events that affect the prices of different countries, of different currencies. We have the interest rate, as I have just mentioned. You have the GDP, the GDP report. You have the CPI, the Consumer Price Index of the currency, and many other things. Then you also have different political events that will come up that will affect the price of the currency. So imagine that the OPEC, the body that is like in charge of all the oil producing countries, if they ban Nigeria from exporting crude oil, if they ban Nigeria from exporting crude oil, you know definitely that ban is going to affect the price of Nigerian oil. You get? So that is one of the kind of events that could just pop up from nowhere and affect the price of the market, affect the price of the currency. If during the Ukrainian war, the Ukraine and Russia war, it affected the currency, the price of Ukraine against the Ukraine rupee or whatever their currency is, it affected the price against the dollar. It affected the price of the Russian currency against the dollar. So if you're a forex trader, stuff like that, you could use it to your advantage to trade. So I'll show you a site right now. It's called forexfactory.com. Forexfactory.com is actually a site that you can go to check the calendar, the economic calendar, what is happening in different countries on different currencies, you get? So Forex Factory, you come every day, there's a news for every day that shows you what is happening in a day. So today now, being Thursday, 8th of June, as you can see, we have a news that came out, unemployment claims, and the news was for USD. So you can come to a site like this, check and know what economic event is coming up and read to know how it affects the currency, then you're going to trade accordingly. So usually the events that have red flags like this, it means that it's going to have a high impact on the currency you're trading. So whenever, as a beginner trader, in fact, you have no business trading news or trading when a high impact news is coming out because it's going to crazily affect the market. During those times, you're going to see a huge spike in the market that is going to affect the market. So if you're not careful, you may blow your account, your trading account, or you may get stopped out on your trades. So this whole thing I've explained right now is fundamentals. fundamental analysis, using real life economic events and political events, financial events to predict the direction of the market, to know how it affects the market, then you trade accordingly. So that is that for fundamental analysis. Then the next type of analysis we have is what we call technical analysis. And remember, I said analysis is what you as a trader is doing to try to figure out how to trade the market, to try to figure out where the market is heading to try to figure out whether you should be buying or selling the market. And we have two types of analysis, fundamental and technical analysis. I have explained fundamental and now technical analysis. So technical analysis is you just using the chart. It's you using what you see on the chart to analyze the market. Let me do a very, very quick analysis for you right now so that you have an idea of what technical analysis is. So technical analysis is you just simply using what you see on the chart right now to trade. So now this is the chart of Euro USD. The currency pair is Euro USD and we're on 1 hour time frame. Now I come up to my laptop in the morning and I want to trade, right? Then I open this pair right here. So what I'm saying is Euro USD. I want to predict whether this pair is going to go up or go down, whether this market is going to continue going up or going down. So when I look at it, what do I see? I see that the market has been moving up, just in this very short picture you're seeing here. This is a low, this is a higher low. It gave us a small lower low here, but we have another higher low here. We have another higher low here, then all the way to the upside. If you look at the candlesticks from here, you see this is a high, a higher high. This is another higher high. So it's easy for me to just look at this from just this time frame and say, oh, the market is going up. So I'm going to be looking to continue buying the market because it clearly seems like the market is going to continue going up. You get? So this is what technical analysis is. Technical analysis is just you looking at the charts, shuffling the different time frames to predict the direction of price, to predict whether the price is going to go up or go down, just using your charts, looking at the candlesticks, using other indicators, using horizontal lines like this and different indicators that will show you whether this price is going to continue going up so that you buy, or whether it's going to go down so that you sell. So that is just what technical analysis is. So right now, I think I've explained the two different types of analysis. That this top-down analysis is not actually a type of analysis. It's just a way to analyze the market. So the two major types of analysis are the fundamental analysis and the technical analysis. So let's talk about how to place a trade, and then I'll explain these other types before we do a proper analysis, so that I'll show you how to do your top-down analysis so that you get a bias as to whether you should be buying or selling the market in every particular moment when you want to trade. So how to place a trade? I'm going to send a video to the group so that you watch how to use your MT5 or MT4, which is your trading platform, to place a trade. But let me quickly show you my MT4 on my laptop right here so that you know or you see how to place a trade. This is how the MT4 looks like. I've not used this in a very long time, so I guess that's why the chart is not showing up. I'm not currently logged into any account. But then this is quite very, very complicated for you to understand right now. But then just know that this is how MT5 looks on the laptop. But it's way easier to use it on the phone. I personally, I don't even use it on the laptop. I use it on the phone. I place my trades on the phone. So I'm going to show you how to use your trading platform on your phone. I'm going to send the link to the group so that you can watch it right there. It's actually very, very simple and very, very easy to do. You just click on new order or place order, then you click on buy or sell, depending on whatever you want to do. So whenever you want to place a trade in the market, it's called you want to place an order. That is what is being called. You want to place an order in the market. And we have different order types in the market. So what is order types is? What is order? Order is simply you instructing your trading platform, your MT4 or MT5, to carry out a particular instruction, either to buy or to sell or to set a limit or whatever. So there are different order types. We have pending order, we have market execution, we have stop loss, we have take profit. So whenever you want to place a trade, you can either instantly place the trade, click on buy or sell, and the market, the trading platform will instantly execute it as to buy or sell. Then you can also set a pending order. It's you putting a limit order or a pending order at a particular level in the market, where you expect that whenever price gets to that market, the trading platform should place a trade for you. Then you have stop loss, which is a particular level in the market where you place that order so that whenever price goes against your prediction and you're losing money, you don't want to continue losing money. So you want the market or the trading platform to close that position, to close that order at that level. Then take profit is where you place your order in the price in the market. Whenever you're in profit, if it gets to that level, your trading platform should close the trade and take the profit for you, add it to your balance. So I have made an extensive video concerning all of this, and I'm going to also share it in the group. You just watch it on different order types and how to execute these different order types and what these different order types mean. So I've made a video on that. So I'll share it to the group. So for now, let's go back to how to analyze the forex market. So if you've been here, congratulations. This right now is like the most important aspect of the class, because this is you literally learning, you're beginning to learn how to actually place a trade and how to come about or how to get a buyers to place a trade. So let's go back to the chart. Now, this is the Euro USD on the 4-hour time frame. Let me hide all of these drawings. So whenever you open your laptop in the morning and you want to trade the forex market, there are different ways that you can trade the forex market. One, or that you can analyze the forex market. One is through technical analysis, the other is through fundamental analysis. I have already explained fundamental analysis. Now, I'm trying to explain how to analyze the market using technical analysis. Now, if you come to your chart in the morning and you want to analyze the pair for you to place a trade, for you to know what buyers you should have and what trade you should take, you start with top-down analysis. And top-down analysis is simply you analyzing the chart on all the pairs, on all the time frames, on all the time frames, starting from the higher time frame to the lower time frame. If you look right up here on my screen, on my chart, you can see where my cursor is. We have the M here, which is the 1 month time frame. We have the weekly time frame. We have the daily time frame. We have the 4-hour time frame, 2 hours, 1 hour, down to 1 minute time frame. So if you're going to do your technical analysis, the first and most important thing for you to do is to do your top-down analysis. And when you do your top-down analysis, what are you trying to ascertain? First thing is you're trying to ascertain the trend of the market. How is the market trending? Is the market trending downwards or is the market trending upwards? You're trying to get that so that you have an idea of where the market direction is. You understand? So you need to start from the higher time frame so that you understand what the market is doing. Now, let me give you a very, very quick analysis here. Now, this is Euro USD on the 4-hour time frame, right? From a quick glance, it's easy for you to say that the market is on a downtrend, right? It's easy for you to say that. Come on, why not? Because as you can see the charts and the candlesticks, they have been moving downwards starting all the way from the top here. This top here is 04 of May. If you look at, let me change to crosshair. If you look at the crosshair down here at the bottom of the screen, you see that the date, because at the bottom of the chart shows you the different dates. So when the price was at the top here, it was 04 of May, 4th of May 2023. 4th of May. So from 4th of this month, of last month, I mean, price has been going down. It has been trending downwards. It has been selling, going down, going down, going down, and all the way to this point. Now, this is the current price right here, 1.07816. So from looking at this chart, you already know that the price is, the market is trending downwards, right? So this is what top-down analysis helps you to do. So it helps you to know the trend of the market, whether the market is trending upwards or downwards. And there's a very popular or common saying in Forex that the trend is your friend. So you only trade according to the trend. If the market is trending downwards, you take only sell. You predict that the market is going to go down. And I said that whenever you're predicting that the market is going to go down, it means that you want to sell. If you're predicting that the market is going to go up, it means that you want to buy. So down is equals to sell, right? Then up is equals to buy. Up is equals to buy. So if you're predicting that the market is going to go up, then you're going to buy the market. If you're predicting that the market is going to go down, you're going to sell the market. So in this case, when you start your analysis from the top to the bottom time frame, you try to ascertain the trend of the market. And right here, we say that the market has been trending downwards because, as you can see, it has been going down. So when you see that the market is going down from the higher time frame, the most basic thing that you want to do is to start looking for selling opportunities because you're predicting that the market is going to go down. So that is the most basic thing that every trader will want to do, to look for selling opportunities. So the first thing is go to the higher time frame. You start from the monthly if possible. This is how it looks on the monthly. So what it is, look at, for the previous month, the market was bearish. This is how the monthly time frame looks. We had a very strong bearish move here before we started having a bullish move. Bearish means the market is going down. Bullish means the market is going up. So right now, last month, we had a very strong bearish candle that went down. And this month, as you can see here, the candle is beginning to go up. Candle is beginning to go up. So on the bigger time frame, you have an idea of a bigger picture of what price is doing. You have an idea of how price has been behaving in a long period of time. So you come to the weekly and check what the weekly is saying. Now, this is previous week's candles have been bearish. Now, this current week is beginning to go bullish. So this is how it looks more clearly. Previous week have been bearish. This candle now is going up. So from looking at this, you can now say, oh, since it has been going bearish for a long time, probably it's going to continue going bearish. So now you may want to say, I want to sell this market. I'm just saying, Then you go to the daily, look at daily. What is the daily saying? You could say, oh, the daily has been bearish for a long while, but look at this particular daily candle. It is very bullish. It has pumped so much. It has gone so much up. Perhaps the market may want to start buying. Perhaps the market may want to continue going up like this. Perhaps the market may want to continue going up like this all the way to this point. So you may say, oh, because of this candlestick, this particular daily candlestick that has gone up so much like this, who knows whether the market will continue going up? Who knows? So that is another way that you can do. Then you go to the 4-hour and also you analyze it and see what the market is saying. So now I've told you that when you're analyzing the chart, you should start from the top to the bottom time frame. That's your top-down analysis to ascertain the trend of the market. So once you get to know the particular trend of the market, the next thing you want to know is to draw certain horizontal levels on the mark on your chart. And these horizontal levels will act as levels of support and levels of resistance. Levels of support and levels of resistance. Now, in case you don't know what support and resistance is, I'm going to do a very quick explanation of what support and resistance is. So now let me try and draw some key levels in the chart using horizontal lines. Let me use horizontal lines. So first of all, this is the first level on this chart. As you can see, this is the first level. This is the topest top of this chart, right? Then the next level I'm going to draw is this level. Just from the look of it, you can see that there's a level here. Why am I drawing this as a level? When price came to this place, it reacted here and it came back down. When it came, it broke, it went to the upside. Here, you see that price was reacting here. It didn't break it. It was just stalling and continued going up. It came close to it, went back up, came close to it, went back up. So any place on the chart where you see that there are multiple touches, that is how you are going to know a horizontal level. So this is also another horizontal level. And look for another one. We have one right here. So this is one touch here, one touch here. So this is another horizontal level. Then we'll draw another one down here. This last point of the market. You could draw another one down here. So why is this place a worthy horizontal level to note? See, the market touched it here and reacted. It came here, broke it a bit, came back, reacted. It came here, touched it and reacted. Now the price is currently at this level. So this is the next thing you're going to do is to note horizontal levels on the chart to make you understand where you should anticipate a reaction on the chart. So if price came and reacted once here, as price is here now, you're going to be anticipating, will price react here and come back down, or will it break it and continue going to the upside? So this is one way to also ascertain levels, right? To also ascertain horizontal levels for you to know whether you're going to be buying or selling. So first thing first, when you ascertain the trend of the market from top to bottom, the next thing is for you to ascertain horizontal levels on your chart to know whether you're going to be buying or you're going to be selling. So these levels now will help you. Now, let me draw the proper trend line. Let me draw a proper trend line to show me the trend of the market, right? Now, the number one rule of a trend line is it helps you to know the trend of the market. It helps you to know what the market is, how the market is trending, and where the market is trending towards. So now, when this market was going down, you see that the market has been respecting this trend line, right? It was going down, it will come back, touch the trend line, continue going down, come back, touch the trend line. So if you were watching this market now, this trend line will help you to guide you to know that, okay, market has been trending downwards. But coming to this particular period, please, right here, you see that the market came and broke the trend line to the upside. So it means that, oh, this market likely may not want to continue going to the downside because it has broken this trend line, right? So we may begin to see this market move to the upside because this trend line has been broken. And that is what happened right here. The market broke the trend line, came back and retested the trend line, stalled here for a bit, and continued going to the upside. So now, even though I've said that the market is bearish, due to my analysis on the 4 hour is bearish, obviously I can see, but then it has violated the bearish trend line. And right now it has retested the trend line and it's going up. So now, what just from this analysis that I'm doing on this 4 hour time frame, I could just say, oh, I'm looking forward to buying this market. Why? Because it has broken the trend and now it has given me a push to the upside, and it has broken this horizontal level, this red horizontal level right here. So what I could be anticipating in this market is for this market to come up like this, come to this horizontal level, maybe react, come back here, then continue to this horizontal level, maybe react a bit, then continue all the way to here. So this is something that I could expect. This is one thing you can expect. So this is like a very, very basic retail technical analysis. And this is a very, very basic beginner-friendly technical analysis that I'm doing. Forex is actually way, way more complicated than this, way, way more like complex than this. But this is like a very beginner ABC method of analyzing the market, just for you to have an idea of what you should be anticipating and what you can expect from the market and how to just get a bias and know how to trade the market. So this is like a beginner class on technical analysis. And I hope you're able to get some value from this. So now you go to the 2-hour time frame to do proper further analysis. 2-hour time frame now, this is how it looks. It has been bullish, fine. So what do I expect? Markets may continue to go to the upside because it has broken this trend line, fine. That's something that may happen. So in our next class, tomorrow's class, we will have a further analysis and further discussion on how to analyze the market. But now I'm giving you like an introduction into technical analysis. So by tomorrow, what we're going to do is we're going to look into further retail strategies. We're going to look into trading strategies. So I'm going to further explain to you what support and resistance is. I'm going to explain to you how to use support and resistance. So these horizontal lines, you could actually call them support or resistance. So right here, this particular line here, now look at this place, for example. When price was coming up here, it reached this horizontal line and it got resisted and it came back down. So this line now, you can call it your resistance, And usually in the Forex market, you are looking to sell at the resistance. When price comes back to the resistance, you're anticipating that, okay, price will likely get resisted again since it was resisted on this particular place before. So that's just like a very basic concept of support and resistance. But then when we continue the class tomorrow is going to be like an intermediate class. So we're going to discuss further on trading strategies or analysis. So this is just an introduction on how to analyze the Forex market. Tomorrow, I'm going to give you a deep look at different trading strategies that you can use to analyze the market to get your bias as to whether you should buy or sell. So in the group, I've already dropped the course outline and I'll also repost it today again. So tomorrow, we're going to be looking at understanding Forex strategies, basic Forex strategy concepts for beginners, market structure, trending market, ranging market, support and resistance, chart patterns, and candlestick patterns. So at least for today, I've been able to explain to you what the Forex chart is, the price, the candlesticks, what different time frames mean. I've been able to explain trading sessions. I've been able to explain how to analyze the market. I've been able to explain the different types of analysis, fundamental analysis, technical analysis, how to do a top-down analysis, why you should be doing a top-down analysis, because it helps you to ascertain the trend of the market. It helps you to know the direction that the market is going. It helps you to get the bigger picture of what the price is doing in the market. Then I've also told you that I'm going to post a video of how to place a trade and different other types in the group so that you can watch that on YouTube because I've already made a video on that. So as for tomorrow being the third day, we're going to be doing intermediate course. We'll be looking at different Forex strategy. What is a Forex strategy? How can you use a Forex strategy to know whether you should be buying or selling a market? We're going to be looking at basic Forex strategies and concepts. We're going to be looking at market structure, how to analyze and know the market structure, how to analyze and know a trending market, how to know a ranging market, what support and resistance is, then candlestick patterns and chart patterns. So I hope this was really, really helpful. And trust me, I know this is very valuable, especially for someone who is just starting out. And I'm recording the class, so you could watch this anytime. And I'll post the video on the group so that you can watch it on YouTube. I'll also post my WhatsApp, my Telegram channel link on the group. You could join my Telegram channel so you follow all the trades I take and understand how I analyze the market and come about whether I'm buying or selling the market at different times. So I will really recommend that you join that Telegram channel, guys. So that's it for today, and see you guys in the next class. So that's it for today, guys. See you guys in the next class. Cheers and bye-bye.